everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. This is Moneyline with Nancy on African Independent Television. It's another edition, and today we're looking at Nigeria's economy in the second half of the year, the notes and the outlook. So take a pencil or biro and paper and take notes. Okwudili Egwu is joining me right now. He's the Senior Vice President at Cowry Asset Management Limited. Okwudili, long time no see you.
It's good to be back. Thanks, Nancy.
Good morning.
Morning.
How are you doing?
Fine, good.
Cool. I see you're smiling. I also smiled. But let's take a look back at the first half, since we're going to be talking about second half in just a moment. The first half of the year, I will characterize it in a way, even though the government officials have told me times without number that the macroeconomic stability, economic analysts have also said that on the program. You know, I try to just follow them. Make I just use fear, agree. You know, I'm translating a statement in my dialect into English. Make I just use fear, agree. Where am I going to? The first half of the year was perhaps resilience wrapped in hardship, because Nigerians are still finding things hard. In your own words, how would you describe first half?
Right, first half is giving a lot of, is giving the foundation for a better hope, for greater hope. You know, because like you say, you use the word resilience. Now, and we need to compare it to 2024. 2024 was indeed a very difficult year. It was an exceptional year. It was a year that we experienced unprecedented price volatility in the market. So in the first half of the year, we saw some level of stability. We saw an exchange rate that was stable. We saw inflation decelerating. We saw positive rating comments from global rating agencies like Moody, Fitch, and the rest. So we saw even the World Bank and the IMF acknowledging that there are positive outcomes of the difficult reforms that we are taking. So, you know, it's giving the necessary foundation for greater things to happen in Q2.
What were the things that made that foundation, you know, perhaps the way it is that we are going to be talking about the outlook in the second half? Okay. What are the things that created that foundation? I heard you clearly. You talked about FX, stability. What other things? Okay. If you're looking at the big picture.
You recall in 2024 that the central bank, you know, jacked up interest rate by over about 800 basis points. And they maintained a hawkish, orthodox monetary stance. Now, we saw a CBN that is completely deviating from what we used to know in the MFLE era. That was both a physical policy and a monetary policy combined together. Was trying to intervene in all sectors. But we now see a CBN that is focused on their primary mandate, which is price stability. Now, to a great extent, that price stability has been somewhat achieved. So we've seen stability in prices. We've seen exchange rate stability. The exchange rate has hovered between 1,500 and 1,650 in the last 12 months. So we have also seen CBN taking measures to institute a transparent and accountable auction and bidding process for FX. So we've seen an improvement in the FX liquidity in the system. And then they met a backlog of FX demands that they cleared. That has given confidence to people like the airline operators to come back and start accepting naira again for FS and tickets. So that level of price stability can give room for anyone who wants to now make investment. Investment cannot be done in an atmosphere of uncertainty. So a lot of people in 2024 were not willing to take investment decisions because they were not sure of what the direction is. But now they have that level of certainty that, look, prices will remain stable. FX prospects is looking better. Reserves is improving. Net reserve is better. At a point, we had a net reserve that was about $3 billion. Now, net reserve now here is about over 20-something billion dollars. So, and then there's also FX inflows is improving via foreign portfolio investors who are coming in and are pursuing our attractive fixed income yields. We're also seeing increased remittances, especially through the official channels for remittances. So those are giving the firepower to maintain the stability and giving the assurance to investors that this is likely going to be sustained.
With all those macro numbers that you reeled out, an average Nigerian watching us right now, what does he or she stand to benefit? How is my life better now with what you are just saying? That FX is stable, naira to the dollar. I mentioned it earlier. I think 1,534 naira yesterday, 52 kobo. Where is the kobo? I never see. Inflation is still at 22.22%.
From where?
Yeah, we were coming from 37%, but at 22% is still sticky.
So if in 1 year you've seen from 37 to 22.2.
So that means there's an improvement.
There's a deceleration.
Disinflation.
Disinflation and it's slowing down. And then it has been consistent for about 3 months now. Okay. And there's a likelihood it will be sustained.
Okay. Foreign portfolio investors coming back.
Right.
Equities market skyrocketing.
They have the best of July ever.
Yes, yes, I think July ever actually. Record breaking.
Yeah.
In all of this, what is in it for Nigerians watching right now? At the end of it, now all this thing where they talk, we go chop. So simplify it and explain to Nigerians why we should take note of this.
Okay. Yes, it's difficult to say that. I know it's difficult to explain this to Nigerians because most Nigerians, may not be benefiting from the macro improvements that we are seeing. And that's largely because we have hitherto a large pool of people below the poverty line. We are the poverty capital, that's not in doubt. Yes, the government may not have done enough to put people out of poverty. The growth is not inclusive, I agree. But there are positives that will also show that things can also trickle down to the ordinary Nigerians. And I will take one aspect. One of the inflation drivers is transportation cost. And one of the factors that drive transportation cost is the energy cost, the cost of fuel. Now let's look at AGO and look at PMS.
Cost of fuel and cost of electricity too, on another
yes,
side.
Yes, I'm just taking transport.
Yeah, transport.
I'm looking at transport. Transport is one of the inflation drivers that we know.
Yeah.
So if you look at transport, look at the fuel that powers transport, industry, AGO and fuel, AGO and a PMS. They have significantly come down from about 1,003 on AGO to about 900 now, and from about 1,002 on PMS to about 825. And we have an intense competition between the Dangote and other major oil importers who are trying to do the order in controlling the downstream sector. Now, we now see this competition coming in because there's incentives for efficiency. There's incentive for better capital allocation, which we never saw before, when in the era of subsidy. Now, this subsidy is now giving impetus for people to pay more attention to see how they can become more efficient. In trying to become more efficient, that's why we are seeing the likes of Dangote buying 4,000 CNG trucks to get involved in distributing refined crude from his refineries to the major retailers and all that. Now, when we start buying PMS at below 800 to 700, there's a likelihood that in transportation costs will come down. If transportation is coming down, there's no likelihood that the cost of inflation will drive up further. So I'm just giving you an instance.
So what you're saying is that if we see reductions in fuel costs,
we're already seeing it.
Yes, if we continue to see that reduction in fuel costs, there would be deceleration in the third quarter and the second half of the year, which we've entered already.
Yes, we are saying that if the inflation slowing will continue, will be sustained.
Do you think, let me go back to the Naira, because I've spoken about this even with the CBN. CBN officials are different fora. I've even made my mind known in terms of, I would love to see a Naira that is like 1,000 Naira to $1. You know, I told one of the top officials of the bank just a few days ago, and he's asked me why. Now, why do you want a cheap Naira? And I told him why I wanted a cheap Naira. What do you see about this FX reforms by the Central Bank of Nigeria? And do you want to see a Naira that is cheap, just like me? Or is better to be stable than having perhaps a higher value? Because Cardoso had said in one of the MPCs, I think last year, when the question was raised, and he said stability sometimes is better than value with volatility.
Yes, like I said earlier, the primary mandate of CBN is stability.
Price stability.
So that's primary, everything is secondary. So if you want to, if Nigerians want to see a cheaper Naira, it may not necessarily be that responsibility of the CBN, but we know that the CBN has made a commitment that they want to see an inflation drop to single digits. And with that stance, I don't know
how soon that will happen.
But he mentioned that.
Yes, I know.
So with that stance, we are not likely going to see monetary loosening until inflation is tamed. But are they getting results with their approach to tame inflation? Yes, they are. So they want to sustain it. But if we want to see a cheaper Naira, then we need to have physical discipline. And I will just put an analogy before you. We have a Dangote refinery that is that has an output of about 700,000 refined barrels of crude every day. That is a $30 billion investment. That investment was from borrowing. That borrowing, we see the production, we see the output. Between 2021, around 2021, there were fake decisions to rehabilitate our national refineries. And we borrowed about $3 billion to do that. We are not seeing the output from that $3 billion. But are Nigeria paying the cost of the $3 billion of borrowing? Yes. Because that injected liquidity into our system. That increased the physical burden. That increased the debt burden, the debt service borrowing. And all these have implications. They have correlations to the exchange rate. Do you understand what I'm saying? Yeah, because by the time you pay up, some of these borrowing are in USDs. So you need to actually earn USDs to pay them off, and they will hit off your reserves. So all that will lead to lower confidence in the Naira and lead to Naira depreciation. But if you have this physical discipline, where we account for every borrowing, and every borrowing is, just like Dangote did, is deployed, utilized in actual production, that production and capability would also lead to greater economic output, and that will lead us to having a more value for our Naira and all that. So it is all related.
So what you're saying in essence is that for the cheaper Naira I want to see, it depends on the fiscal authorities.
It depends on the fiscal and physical discipline, not the responsibility of the CBN.
Okay. It's not the responsibility of the CBN.
So we just need to make sure that for every activity, let's look at our borrowing, let's look at our tax policy, let's look at trade policy. For instance, I read a report that says that people are now preferring West African ports for their cargoes because it's cheaper to process, because the custom tariff here is higher. So would you like to continue to give custom a target to meet revenue? What's our trade policy? What are you trying to to improve trade facilitations in Nigeria? So those are the things that can help increase the attractiveness of the Nigerian environment.
We can't continue this discussion without talking about the rebased GDP.
Okay.
The rebased GDP equation in the outlook for the second half.
Okay.
How did you impute that? Has it changed anything for you in terms of outlook for the second half?
Not really, because the rebasing is based on 2019, and it's just to acknowledge that there are structural changes in the economy that needs to be captured. But the rebasing itself does not really show much. I'll give you an instance. We have done a rebase, and we can see that agriculture still continues to play a critical role as a major employer, which shows to a great extent that we have not really moved from subsistence level of farming to a mechanized or commercial farming environment. So a whole lot still need to be done. So the GDP numbers from the rebasing does not really incite so much hope and doesn't shake my outlook. My outlook is underpinned on exchange rate stability, inflation coming down, and then on crude oil production volumes going up and remaining stable. At least for now, we have been able to meet our OPEC quota, which is very interesting. And the rig counts in the oil and gas sector is beginning to increase, and we'll begin to see significant investment via the likes of local indigenous oil players, ramping up production in the upstream sector. And those are very strong positives. And the attractiveness of Nigerian issued securities. Despite the fact that we have high benchmark interest rates, yields on fixed income securities are dropping. When yields are dropping means their prices are going up. Prices only go up when there are stronger demand for your securities. So a lot of people are interested in Nigerian securities.
What do you mean by securities? Sorry, explain. Let people not think we're talking about security outfits.
Securities are maybe assets, financial
yes,
assets, financial assets.
Stocks,
bonds, treasury bills, commercial papers, OMO.
Yes.
Those
open market operation.
Also,
I just wanted to put that in so that people understand.
Financial assets.
Yes, that okay. So go ahead. You're saying, of course, that
there's greater demand.
For it.
So not just both our Eurobond yields, our Eurobond securities, our equities market, and our fixed income securities. In fact, we have unprecedented interest in our equities market, and you can gauge that by the volume of transactions that now happens on a daily basis. Hitherto, we used to have about 3 billion, 4 billion average daily trading volumes, but now we have about 20, 30 billion on average trading volumes, and we'll keep having greater interest. And we'll have a significant number of stocks that are hitting 52-year high, and the numbers, the financial numbers that these companies are also producing also gives credence to the fact that the economy is indeed improving and becoming better.
Becoming better and looking at even the outlook for the second half, is it becoming better for the elite and the urban dwellers than the low income and the rural dwellers? And you know where I'm deriving this question from? From, of course, the inflation data.
Okay, so
you understand what I mean?
I publicly said that if you want to benefit from...
So it seems like a two-tier recovery. I said, well, elite and urban recovery, but it's not going to the grassroots, the bottom of the pyramid.
It's not per se.
Like Professor Paul Collier wrote.
Okay, now let me take it from this angle. Let me take Nestle and MTN. MTN is a utility player. Everybody, both those in the rural area, have access to an MTN service, possibly, because they are everywhere. So MTN provides services to everybody, right? Now, the aggregate revenue that MTN gets from everybody who uses their service, either for data, for voice, or Momo, aggregates to total revenue, right? Now, we are saying MTN just released half-year results, and we'll see about 60% growth in revenue. That revenue, is it coming from urban or rural, or from everybody Nigerian who uses the service? So there's no segregation. Where we have a problem is the value that, because MTN is creating, at half year 2024, they were in a loss position about 250 billion naira. Now in half year 2025, they have a half year profit of over 150 billion naira, right? Now that value that MTN has created, who is benefiting from it? The shareholders.
Investors.
So is it illicit to be an investor? So has MTN created value from everybody? It didn't create value from just the urban. It created value from everybody who uses their service. And if you have actually gone to the hinterland, you see that there is broadband service almost in most rural area. That is why we can have the likes of OPay, Money Points, PAMPay in every village. That is why INEC can conduct elections in every part, in every ward in Nigeria, in every polling unit, because they believe that it can do IRF and upload, because they believe there is a network there. So if you have network there in almost every hamlet in Nigeria, MTN is providing the value, and they are creating value from those services. So who is benefiting from the value? So also for Nestle. Nestle sells day-to-day basic utility, Milo, water, Maggi, and the rest. That is used everywhere. Not by the urban. Now. They are even in sachets, which makes it affordable to everybody. So the value that Nestle is creating, who is benefiting from it? Did they ask the elite to...
It's the shareholders.
It's the shareholders. So what's stopping most people from being shareholders?
Money. How much is a Nestle stock now?
It's not necessarily money. I think the issue here...
I understand what you are trying to say, but I'm just trying to...
No, that's what you are saying that...
Because even with 5,000 naira, you can invest in Nigerian.
So when you're not saying that the value
I understand what
is being created for the urban elite, I think what is critical, what you determine who creates value is those who have knowledge, who are financially aware, savvy. You understand, and who have patient capital.
Okay.
And access to capital.
Why I also said that two-tier recovery, and let me explain this, is you mentioned it earlier on that we have the bottom of the pyramid in Nigeria. Many Nigerians live on less than $2. I think the figure has even been adjusted now to about $2.15 a day.
No, I concur that the growth is not inclusive.
Yes, the growth is not inclusive.
I concur.
Yes, so for people that are still managing, barely scratching the surface, even investing in the capital market will be a luxury. This DG of SEC was here last week, and I admonished him and admonished his organization in terms of investors' enlightenment, that they needed to do more, even in terms of enlightening people, financial education. And he agreed with me, because the more Nigerians even understand that, okay, there's an opportunity here, that even with 10,000 naira, you can invest. I've taken it as a point of duty, even here on the program, every month, you can invest 5,000 naira on savings bond. 5,000, that's the least amount. So you may not necessarily have an excuse not to be an investor. It depends on the volume of money you have. Now, where am I going to? That is where I'm going to in terms of the bottom of the pyramid. But having said that, all this that you have said, especially now in this second half, what should an average Nigerian behavior be towards the second half? That's one. Then investors' behavior to be able to take advantage of all of this. What should we begin to do?
Okay, so
individuals, then even businesses.
Individual and businesses.
Yes, businesses.
Okay, so for individuals in this in the second half, for investing purposes, I usually encourage people. I say that investing outcome is anchored on 3 pillars. The 3 pillars is what you earn, how much you earn, so what you spend on, and what you invest on. So if you look at the earning ability, do everything possible to increase your earning ability. So if you need to do multiple streams of income, please do. If you need to ensure that your spouse is also working, every household to ensure that they don't have one single source of income. If you need to improve on yourself, invest yourself to earn a higher pay, you need to do that. You need to see, what can I possibly do to increase my earnings? Now, because it is the earnings that you can work on to have savings. So if the earnings is not there, there will be nothing to save. So you need to increase your earnings. Now, it's not just enough to earn. I have people who could earn up to 3 million a month, and they spend the 3 million naira every month. So from that earnings, what are you really spending on? Are you spending on the needs or wants, nice to have, or essentials? So are you having a frugal lifestyle? Are you adopting a Warren Buffett kind of person? Or are you living by the day? Or do you have an what you call lifestyle inflation?
Inflation.
So if my earnings increase, my lifestyle also increases, my taste bud also increases. So if you can control your earnings, because we have seen from celebrities, athletes, and the likes that it's not about how much you earn, it's about how much you're able to keep from what you have earned. So when you have significantly reduced your consumption from your income, you have savings. So if you make sure that your consumption is significantly less than your savings, you have, than from your income, you have savings. But it's not enough to just keep savings. Invest that savings. Now, you mentioned something about level of capital market awareness or investment awareness. There's statistics to show this. If you look at aggregate savings account balances across the banks, we have about 41 trillion naira. But if you look at aggregate collective investment scheme, total mutual funds, just about 4 trillion. Meanwhile, you have about a return of
so
about
much
3.
cash in the banking system.
So, and most of these banks are kobo aggregated across the country. So there's a lot to be done in ensuring we have more investment actions by people who really have savings.
And most of those cash in the banks are about 500,000 naira, 500,000, according to the NDIC at the time. Many Nigerians keeping money in the banks are 500,000.
What I'm saying is that aggregate.
Yes, less than that actually. Yes, aggregate. I understand what you're saying.
Huge.
It's big. Yes.
So
and that's why the banks are declaring jump up profits, because they are using our monies to make money.
It's no brainer. Somebody had described them as a hedge fund fixed income, a hedge fund fixed income fund. So
yeah.
if you now take your savings and do investments, then you can have a better investment outcome. You have a better well-being.
Not Ponzi schemes.
No,
not Ponzi schemes.
So you must have an investment goal. You must have a financial goal, and benchmark your investment returns against something. You can benchmark your investment returns against inflation, against all-share index, against 10-year yield on a treasury bond or something. So then you can begin to track your performance. But even if you don't have investment knowledge, we have a lot of mutual funds today that provides the same level of liquidity that your savings account in a regular bank can provide to you. With technology, you can redeem your mutual fund subscriptions and get value within 12 hours.
Are you seeing investors' behavior changing? Are you seeing perhaps Nigeria's young, tech-savvy population driving a new investment culture, especially now that you can invest online and all that? Do you see that happening, and what the outlook will be in second half? And even adding to that, what sectors in the second half do you think would outperform that we should look at? Even for me, as I sit down, if I get more money, where should I put it?
Yeah, I think the investment behavior is changing. 2-3 years ago, what was trending was crypto, FX trading, US stocks. Everybody wanted to do US stocks and all that. Now the feedbacks we are getting now, the traders are the same Gen Zs that were fueling cryptos, fueling FX trading, fueling US stocks investments, are having a rethink and now beginning to have interest in Nigerian equities. And they are also coming with the same zeal that they approached crypto investing to the equities market. So they are beginning to drive volumes in the equities market. And they are all enabled by technology. Because now we have, our market is so technology enabled that you can actually trade on yourself, you can monitor your investment, you can monitor your investment portfolio. And then the returns that we are seeing from the underlying companies, because the stock market is backed by real companies, and you can see what they are doing. You can look at their public disclosures, and they are all bound to publish every quarter their financials to the minute detail. So if you look at the numbers, look at the valuations look very good. The dividend yields also looks very attractive. So there's opportunity, and they are in the last 6 months, they've seen costs to believe in the market, and they are greater in number. And like I said, we have tech and enablement, and they like tech, so they are flocking in.
Okay. Finally, as we
So you talked about the sectors.
Yes, sectors, yes.
Well, 2023, 2024 was very bad for the consumer and industrial goods industry. And a lot of them were negatively impacted by FX revaluation losses. MTN, Cadbury, Nestle today have negative shareholders funds, not because their product was bad, not because their operating environment was that difficult or the operating income was, but because they had to make FX revaluation losses. And they made losses in 2023 and 2024 that threw their retained earnings into accumulated losses position. In 2025, because of the stability of the exchange rate, there are no longer FX losses that they have turned into profits, and that is giving a boost to their financial performance numbers. Okay. Second factor is that they have successfully increased their product pricing. The input costs are increased. They have transferred it effectively and transferred that to the consumers. So the consumers have come to accept the new pricing, and we are beginning to see ramped up revenue.
Yeah, but quality has dropped. I need to also say that we were even having a lot of drop calls talking about the telecommunication sector and all of that. But I want you to chip this in 30 seconds because we've got to go. What should government do in 30 seconds, the second half?
Government needs to address the hurdles that is mitigating against inclusive growth, address insecurity, improve the operating environment, improve our legal systems, address infrastructural challenges like roads, education, health, and the rest. Okay. So we need to have inclusive growth.
And not jobless growth, as we're having 3-point-something%. Thank you very much, Mr. Egwu, for coming on the program.
Thank you, Nancy.
All right, I've been speaking with Okwudili Egwu, who is the Senior Vice President at Cowry Asset Management Limited. We've been talking about the second half economy. That's talking about Nigeria's economy in the second half, the notes and outlook. And I hope that you've taken notes of what we've discussed this morning. From me and my team, I am Nancy Najib. Be the best you can be and be the change that you want to see. I'll see you all again tomorrow. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.